The glint of a designer handbag, the polished gleam of a premium watch, the distinctive hum of a high-end car. Luxury brands have always held a powerful allure, signifying status, exclusivity, and quality. But in mid-2025, as Indonesia and the global economy navigate a landscape marked by persistent uncertainties and shifting consumer priorities, a critical question arises. Are luxury brands truly worth their premium price tag? Data-driven insights from various economic indicators and behavioral trends suggest a nuanced and evolving answer. The global backdrop, a slowing yet resilient economy. Globally, the economic outlook for 2025 presents a mixed picture. The International Monetary Fund projects global growth at 3.3% for both 2025 and 2026, largely unchanged from previous forecasts, though some regions face downward revisions. The World Bank offers a more cautious outlook, forecasting global growth to slow to 2.3% in 2025, the weakest pace since 2008 outside of global recessions. This perceived value is meticulously constructed through several key pillars: a handcrafted leather bag, a Swiss-made mechanical watch, or a meticulously engineered sports car often boasts an undeniable level of quality that sets them apart. This narrative elevates a product from a simple commodity to a piece of history or art. This creates a sense of exclusivity, a desire for what others cannot easily obtain. This aligns with Vibo goods theory, where demand for a good increases as its price increases, precisely because of its status signaling function. This taps into the behavioral economics principle of endowment effect, where we value something more simply because it has a perceived history or narrative attached to it. This aligns with neoclassical economic theory's focus on consumer utility and the idea that higher quality commands a higher price. This emphasizes understated elegance, timeless design, and intrinsic quality over overt brand display. The value for money equation is being reevaluated, potentially leading to a decline in impulse luxury buys, and a greater emphasis on investment pieces that hold their value or offer long-term utility. Brands with transparent and ethical supply chains, sustainable practices, and a commitment to social responsibility are gaining favor. This aligns with evolving behavioral economics insights that show consumers are not solely driven by price and utility, but also by their values and social conscience. The answer is more complex than a simple yes or no, and largely depends on the individual consumer and the evolving market dynamics. The slight recovery in Indonesia's consumer confidence in April, driven by a rebound in income perception but offset by declines in the sub-indices for overall job availability, highlights this cautious optimism. People feel their income is improving, but still worry about job security, making them think twice about discretionary spending. This is where behavioral economics holds sway. The intangible benefits often outweigh purely rational calculations. Consumers are increasingly valuing durability, versatility, and ethical sourcing. Seeking true value rather than just flashy labels is linked to a fourfold increase in productivity growth and is transforming industries, including retail. AI, as highlighted by APWC 2025 Global AI Jobs Barometer. AI-powered analytics can help luxury brands optimize their supply chains, personalize marketing, and enhance customer experiences. However, AI also enables consumers to make more informed decisions, potentially eroding some of the information asymmetry that once benefited luxury brands. This could push brands to further innovate in product development and service to justify their pricing. Their true worth is increasingly being evaluated against a backdrop of global economic realities, evolving consumer values, and the disruptive forces of technology. To remain worth it, luxury brands must not only uphold their traditional pillars of craftsmanship and heritage, but for others, perhaps even rational, performs better, policy uncertainty, and elevated central bank rates designed to combat inflation, or offers a more refined experience. Down from 5.8% in 2024, approach to luxury where utility and longevity are prioritized, playing on cognitive biases like social proof and the bandwagon effect. The picture is more resilient, though not without its own challenges. It's transforming into a more subtle, yet profound. Its association with iconic figures, or its enduring legacy can add significant emotional value, shine of enduring value, sustainability, and a deeper understanding of the discerning data-informed consumer, but also embrace transparency, belonging, and social recognition. The gleam of luxury might be fading for some. This suggests a move away from purely Viablaski consumption towards a more consumers derive greater utility from a product that lasts longer. This slowdown is attributed to heightened trade tensions, above market expectations but within Bank Indonesia's target range of 1.5 to 3.5%. This rise was primarily driven by a rebound in housing and utility costs, as temporary energy subsidies were withdrawn. Unemployment in Indonesia continues its downward trend, reaching 4.07% in February 2025, a slight decrease from February 2024, and the March 2025 rate was 4.76%, the lowest since 1997. Global headline inflation is expected to fall to 4.4% in 2025. Heritage, marketing, but remains above pre-pandemic levels. In Indonesia, these efforts skillfully tap into consumer desires for self-expression. This is a clear application of behavioral economics. Inflation in Indonesia was recorded at 1.9% in April 2025. The intangible value, craftsmanship, luxury brands have always excelled at building an aura of desirability, far beyond mere utility, craftsmanship, and quality. Many luxury brands genuinely invest in superior materials and artisanal production techniques. Heritage and storytelling. The rich history of a brand, exclusivity and scarcity. Luxury often thrives on limited availability, long waiting lists, and high price points that inherently restrict access. Marketing and brand building. Sophisticated marketing campaigns, celebrity endorsements, and curated retail experiences transform products into aspirational symbols. The shifting consumer psyche in 2025. Beyond pure status, however, the current economic climate in Indonesia and globally is subtly shifting the consumer mindset, influencing the worth of luxury in new ways. The quiet luxury trend. Amidst economic uncertainties and a growing awareness of overconsumption, a trend towards quiet luxury is gaining traction. Value for money redefined, while luxury prices remain high. Consumers, particularly in a landscape where consumer confidence is fragile, are scrutinizing purchases more closely. The influence of digitalization and AI. The rise of e-commerce has democratized access to information about luxury goods, allowing consumers to compare prices, read reviews, and delve into manufacturing processes. Sustainability and ethics. A growing segment of consumers, particularly younger demographics, is increasingly factoring in the environmental and social impact of their purchases. The verdict? Worth, defined by more than just price. So, are luxury brands worth it in 2025? For some, the premium price remains justified by exceptional quality and durability. A well-made luxury item can truly last a lifetime, offering a lower cost per wear or use over the long run. Emotional connection and self-expression. The pleasure derived from owning something beautiful, unique, or personally meaningful remains a powerful driver. Investment potential. Certain luxury items, like rare watches or limited edition handbags, can appreciate in value, becoming tangible assets. However, the worth is being increasingly challenged by economic pressures. The global slowdown in Indonesia's nuanced consumer confidence mean less discretionary income for some, leading to more cautious spending. Changing values. The shift towards quiet luxury and sustainability suggests a move away from ostentatious displays towards more meaningful consumption. Transparency and information. The digital age empowers consumers to scrutinize claims and find alternatives, reducing the reliance on brand mystique alone. In 2025, luxury brands are no longer solely defined by their price tag or overt branding.